Hello. It is afternoon over here. Hope you're doing good. This right here is a plain chart for, not a plain chart. This right here is a chart for AUD USD, on the weekly time frame. Whereby we just smashed this this first break of structures, a high, and we are moving downwards. We are targeting this this liquidity over here and potentially smashing this lower low. It's our long-term target. Let's start to do analysis on the monthly time frame. Some guy by the name Hamza Destiny was asking on the comment section on how I get my buyers, and I replied that I usually look at the market or from the higher time frames, just trying to spot our age this model. So in this video, I'm just going to demonstrate exactly how I do it. See right here, I sim AUD USD, Australian dollar, US dollar, on the 1 month time frame. This is a plain chart, and we had a swing high here. You can see that swing high being taken. Right here, you can see it. Liquidity has just been swept, right? And with our model, which is a bearish version, which we said it's represented like this. We said we need a sweep of liquidity for this first leg, first break of structure, and then at this high right here, this is where we take our sell to potentially smash these lower lows, right? But you can always take partials in between this leg right here. That is it. So here we can see the liquidity was swept very clearly right here. We can see on the monthly still the first break of structure is very far. That is this one is very far, my friends. First break of structure right here. Okay, so we said okay, just following the logic by what this model says, right? You just set your sell order here, and then your stop loss right above here. Then you'll be crazy, yeah. But you can see the way this guy was there was some form of reaction of it, and we took some profits, some partials. But because we are on the monthly, we can drop down on the lower time frame to try refine our risk exposure. All this area here, all this area to this place, that's a little bit big, right? Let's try to find the first break of structure on the lower time frame, on this leg right here. So moving on, we get on the weekly. On the weekly, this is exactly what is happening. This is the liquidity that we separate on the monthly. The first break of structure, maybe I didn't represent it on this chart. This is just a small bit of lipstick on my charts. So the first break of structure that is very, very clear on the daily, on the weekly here, is this guy right here, right? It's because we had the first leg, then first break of structure, then this high. This is where in the long run, think in the long run, the word, or the long term, in the long run, we are supposed to take our sell off of this high to potentially ride the market downwards in the long run, in the long term, in the long run. Yeah. But currently, weekly is a bigger time frame, right? But what we can see, what the market is doing right now, we can see that this liquidity was swept right here, right? The liquidity was swept. After sweeping this liquidity, we see the market just reversed on this point of interest, right? And we are now rolling down, right? And before we rally down, we can see there was a first break of structure still following this model. Liquidity swept. First leg, first break of structure. Then this high, this way we take our sell order, target this lower lows. You can see there was a sweep of liquidity over here. And then the market reversed off of this point of interest of this zone. This is another series I'm going to drop to teach on that liquidities. See, liquidities. We can say they are form of. Okay, I know everyone has played football, and not everyone. Football is a very popular game worldwide. And if you've not played, then there is a high probability, high chance that you have watched one. Yeah, it is a very popular game. And in that game, mostly have two sides, right? Each team has 11 players, and among the 11 players, play different parts, right? There is a goalkeeper on the goalpost. You also have the defenders protecting the goalkeeper, protecting the the ball from getting to the goalkeeper. We have the midfielders, right? And we have the strikers. I believe that is it, though I'm not that fan of football so much, but at least I have a clue. So, see, defenders and a goalkeeper, right? I can relate the role that defenders play in football to liquidity in trading, right? And then the goalkeeper as this point of interest that you just seen right here, this point of interest here. I'll show you how to find this point of interest, maybe probably on the next video. The goalkeeper act as a point of interest, right? Whereby after the sweep of liquidity, after the other team is trying to score on the opponent, right? And the last the second last guy before the ball before the goal is scored are the defenders, right? This right here, this liquidity right here, is the defender. We can relate it as a defender, right? You can relate it in trading as defenders. Once the liquidity is swept, so it means that the ball that the defenders have been out. The other team has overpowered the opponent's defenders, right? Once the liquidity is swept, then the only guy left right there is the goalkeeper, right? Is the goalkeeper before the ball gets to shake the net, right? And now this is the goalkeeper, right? So we have the other opponent player with the goalkeeper left alone. This is where all of the team's trust lies, right? Yeah. If this guy, if this guy is broken, if the goalkeeper is overpowered, right? If the goalkeeper is overpowered, then it is a goal. Then the other team scores, right? That's exactly what happens in trading. Though I've not brought it very well, but I think you get the analogy. That once this guy is taken, this guy, then there's a score from the other team. So in trading, we have a sweep of liquidity, right? And once you set your order here, right, and it's triggered, you have predicted the market to move downwards. Then it gets to this point of interest. Okay, it gets to this point of interest, touches it, and this guy fails to hold the price, fails to withstand the price, to hold the price, whichever, right? Then your stop loss, once the goalkeeper is overpowered, your stop loss is hit. Then you take you take a loss. That's the nature of trading. Trading is also like a game. Trading is a game, just like football. For most of the games, there is always an outcome, right? And an outcome. See, an outcome in trading is either a win or a loss, right? Have a win or a loss, but you can always take partial, so you can even go break even. In football, we are also trying to find a winner and a loser. Right? Or a draw, maybe, most probably, for those guys who love football. Yeah. Hey, was that out of okay? Let's continue. As I said, should I go back and start where I came from? I started from. So this guy was from the weekly sweep of liquid, from the monthly. Then we had a sweep of liquidity here. Then this guy held it. There's an aspect of, see, the goalkeepers are now acting as the. These are new concepts for the guys. See, this is an order block. You can see these are this here. So the market is reacting off of it, and we rally down. Right here, sweep of liquidity, first break of structure is right here. It's high. This is right here. This way, we barely swept it. Yeah. You can imagine of, think of this accurate. What was this market just trying to what was it trying to get off of this place? See, after just barely sweeping that liquidity of the first break of structures high, then boom, we are down. Look at this accuracy. Yeah, this is now the concept of an algorithm. Yeah. The market was just the market's aim was just to take this guy and boom. Yeah, that is it. So we had a first break of structure, this high right here, and we rallied down like crazy. What is our target? See this one here. After we swap this guy, what is our target? In the long run, seeing following this model, we are targeting these low lows, which are here. This guy here. is where we are targeting. Yeah, we are still on the weekly. That is how I get my buyers. Yeah, my guy by the name Hamza supporting me so much. This is how I get the buyers. And see, before we can get here, we can see there was a liquidity that's swept here. See this guy? We'll react off of this guy a bit before we take this guy. But right here, we don't know what the market will try to do. Maybe we can even reverse, but anything can happen in this market. Anything in this market, right? Mark Douglas was saying that the consistent losers do almost anything to avoid accepting the reality that no matter how good a trade looks, it could lose. No matter how this setup looks, that this guy is gonna be smashed. It might even reverse because we are now getting onto the discount zone. Because I believe we are over halfway, right? So you are operating on the discount zone. There's a discount zone and the premium zone. You measure this this leg from here to here. It's halfway. The downside is the discount zone. The upper side is the premium zone. So we are on the discount zone. Anything can happen. We can even reverse. But But we said we should first have our own buyers where we think the market will draw its liquidity, which we say is right here, this lower low. But before we can get to this lower low here, all of this on the weekly, all of this all are poised to take your money from all this. But let's first look what was happening here. I show you the fractal nature of markets. So dropping down on the daily, this is what we see. This is what we see. This is what we can see on the daily. This guy was barely swept. Yes, it's the market. See the way the market was just consolidating. Someone will say consolidating, but it was making sense. This consolidation was making sense because we reacted off this guy. First guy break of structure, swept this guy. We also reacted off this guy. Reacted off of this guy. Then we came and now we smashed this guy. After just touching it, we dropped down. What was happening here? This drop. Of course, let's look at this guy here. We are now trying to spot our berry. Still, we are still operating on one model. This guy. Yeah. When I said mastery, you have to do one thing over and over again until you get bored. When you get bored, that is when now it will click on your mind. So I'll be repeating what I'm saying. So this is a sweep of liquidity, first break of structure. Then this is the setup. This is a pattern that we are looking after this sweep of liquidity right here. Of this guy, right? And see this flash here. We took this guy, this daily candle. You can see we took this daily candle right here. That shows that there was some form of sweep of liquidity. We even took this guy here. You can see this guy here, but it was not that clear on the daily. Just to train your eyes that this one is not clear. But once you get when I started using this, when I started trying to make this model into practice, it was a bit hard, right? But as time goes by, I can even spot even without seeing a very clear break of structure like this place here. Let's drop on the lower time frame to see what exactly is doing of this market, of this place. We are on the daily. Now let's move on the 4-hour time frame. Coming down, these are the markings. These are the markings on the daily time frame. This is the guy I said that we took, right? And right clear here we have a sweep of liquidity. We can also see there was a sweep of liquidity over this place. No, a market structure shift. Hey, what's going on? Still following this guy, this model, where I said for you to say for the setup to be for this lower low to be guaranteed to be taken, we should have some form of market structure shift, right? This guy here, this is the guy, the last guy that formed this high before we swept this guy with this liquidity. You can see this guy was taken off here. So after this guy was taken, we should start now expecting to take our sell off of this leg, because there was already sweep of liquidity here. Still we are still now operating on this mode. A sweep of liquidity we had now right here, sweep of liquidity, a sweep of liquidity. So this is the leg that we have to anticipate a fast break of structure before we rally down. Of course, the clearest fast break of structure on the daily is this guy. And see, this market is going down, right? And it is of what can I say? How can I explain this? A sweep of liquidity right here, fast break of structure. Then you can okay. Let's drop down on the 4-hour time frame. This is on the 4-hour time frame, right? We had a sweep of liquidity. We had a market structure shift over here. This is the guy I said we should now look. This is the leg we said should look for the fast break of structure. And clearly, the liquidity sweep on the daily was around somewhere here. But dropping down on the 4-hour time frame, now the market structure is now starting to form very clearly. We can now see the movements, yeah, the uptrend, the downtrend, those swings, right? So we can see very clearly that we took all this liquidity, and reacted off of this guy. Is the analogy of a goalkeeper, right? So we had a defender off of this place. The goalkeeper the market react off of the goalkeeper. Then the clearest fast break of structure that you can see on the 4-hour frame is this guy over here, fast break of structure. It's high. You can just see it was just smashed. After it was triggered, this is the model. I will be boring you with repeating this model, right? This is the guy, sweep of liquidity, right? Fast break of structure. This high, take it. We react off of this guy, sweep this guy, right? We can still repeat this setup around here. This was the release of it. I think, was it CPI or FOMC? I remember that day. It was just crazy. The first break of structure that you can see that is clear. See that this is the last guy standing. Maybe around here. We could drop down on the lower time frame. You can see this guy over here was smashed, and we rallied down to take this lower lows as our target. Ta-da. It is as simple as that. That is how we anticipate for we find our bias. We find our, it's not even the thing to do with a bias with my model, right? My work is just to look for this model from the higher time frame. I do a top-down analysis of this model from a higher time frame as I drop down. Yeah, can even analyze on the begin from the higher time frames. I did see it was which pair? Euro USD. When you look at it from the 6 month and the 3 month time frame, hey, it's just clear. Everything is just the draw on liquidity excuse, is just clear. Yeah, as you drop down on the lower time frames, as you try to refine your stop losses, right? Where is it? It was just like that. So I don't know what to say again. We begin from the monthly data came around, but in the long run, this is the guy we're expecting to take before we rally down, before we react over it. But now currently we are targeting these lower lows. Will they be smashed? Will the market reach this guy? We all don't know. What we are doing is just prediction. Yeah, we make the money that we make little money that we have to, then we get out of the market. We don't have to overstay. Yeah, just predicting our draw of liquidity. There's no, I believe there's no marking scheme in the chart, right? There's no one who is assured that this market is going this direction, right? There's no surety, but we just have to find something that repeats over and over again, and we try to be disciplined with it. Yeah, and we execute fearlessly on the same. I believe that is what I had for today, and I thank you so much for watching till this end. And I believe, and I'm going to do a video still on Audi USD on this aspect of defenders and the goalkeepers. I'm going to talk more on this guy here, on this guy. The sweep of this liquidity market always reacts off of that guy, but once it's taken, then we are out. But it has to do something. It has to do some reaction before we smash him. That is it. Thank you so much, and it is a Friday. Trade carefully. Yeah, the market always, if it's a bullish market, right? After some time, when the market is almost closing, it will tend to do some reverse. Yeah, some reverse before it closes. So when many guys are taking profits, see, when someone buys, you expect to sell at the higher price, but near the close of the market, many guys are leaving the market, so the market tends to drop down a bit and closes at some level, leaving a week. Maybe if we are on the daily candle. That is it. Thank you so much, and take care.